Hello, trade pros and YouTube viewers. I hope everyone's having a great day today. We've got another great video for today, and I'm going to be talking to you about trading against the trend with high probability, one of two ways. So I'm going to break down two different ways to trade against the trend today to identify those flip moves against the trend to a high degree of probability. And we're going to be using the two charts that you see on my screen right now here today, the footprint, which is on the left, and we've also got the range bar, which is on the right. So I want you guys to smash that subscribe button and that like button before we do start this, before we jump into the intro. And I want you guys to drop some comments down below. Do you guys trade with the trend or against the trend? How do you find that works? And have you developed a method to trade against the trend? So lastly, ring that little bell to notify you when we do go live every morning and when we drop new videos just like this one. So let's go ahead and get started. So let's break it down. There's one of two ways that I like to identify trading against the trend. What does trading against the trend mean, first of all? So against the trend is the counter position that does not flow with the trend. So essentially it's a fade. It is a fade trade, and it's riskier because the trend usually continues until it breaks. Sounds kind of ridiculous, right? But when you are trading momentum and you are watching how momentum continues to push the market either up or down, it becomes very difficult to call tops or bottoms. You don't know when the market's going to stop falling and you don't know when the market's going to stop rising. But I'm going to show you two effective ways where you can start anticipating those reversal moves. So this is a fade trade and it's going to be against the trend. So if you're taking a bull market, for example, if you're taking a bull market would look something like this. Let me just get rid of all these dots on the screen here. A bull market looks something like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You can't say, okay, right here is going to be the top or right here is going to be the top, because it could easily just do this and continue forever, right? So every time you try to anticipate where a top may be, your stop is getting destroyed by these buy stops that say, hey, you know what? There's no top here. Let's keep going. How could you possibly trade without the trend and expect to make money if it's just going to continuously push your stop up? How can I predict or call where the top may be or where the bottom may be on a move so I can buy it or sell it at that area? Well, predicting it is not possible. Essentially, it's very, very difficult to understand where the top or the bottom of a market may be. However, understanding there's little indications that may tell you that, hey, the top is near, maybe you should start selling it, right? In a bull market, it may be lower highs, right? In a bear market, it may be higher lows, right? Towards capitulation areas. Maybe rotations. It may be this, it may be that, it may be order flow. So I'm going to break down two ways to identify the counter trend move and trade successfully against the trend. I'm going to be using a 10-tick chart here. This is a 10-tick range bar on the right, and this is a 10-tick footprint on the left. And I'm going to show you guys how we can identify the counter trend move so we can trade against the trend. So number one, if we open up the range bar, let's start with this guy. We want to identify the general market trend to begin with, right? So if we zoom in really aggressively to the day's trend, the day's trend begins right over here, where this yellow line starts. So everything to the left of this day trend is the overnight session. We don't care about that. We want to see the day trend. And based on the day trend, you can see we open a little strong, but we start with a lot of weakness. So how can you know that these are going to be the bottoms and you should be buying these bottoms, right? Number one, when you're trading on a tick chart, whether you're trading on a tick chart or whether you're trading on a time chart, the key thing to notice is higher lows against the down move. If you start to see lows, double bottoms like this, and areas of capitulation and higher lows, you can anticipate that you are starting to reverse trend sentiment and you could call near a bottom, probably not a bottom, but that's when you know you should stop selling. It doesn't necessarily mean you have to start buying, but it means that you should stop selling this market and see if we do get that reversal back to the upside, right? Another quick tip is stagnation. If you come and see these areas rotate like this and hold, example, double bottoms, and you can see they rotate, whether it's on an hourly, whatever the candle is, but I like Tentic because they hold what I call rejection candles, and those candles are candles in the opposite end of the trend, so white candles, right? They rotate them really well, and they show stagnation. If we look at this most recent move, it's going to be very, very interesting and very surprising because you can see that the trend is clearly to the downside here. You're getting a pretty strong bear move, and guess what? You broke a low. How many times did you test this low on a retest for the continued push lower, right? This is another aspect for finding how you could trade against the trend. The more that you test a resistance point and you can't make a new low, and you can see stagnation and rotations here, the higher probability you're going to get what we call a buy stop run that fleeces these late shorts, and this is the anti-trend move, right? So you don't get in here, but you look to pick these bottoms in anticipation that this newfound support is going to hold, even though the trend is to the downside, because we are testing resistance 4, 5, 6, 8 times without making a new low, right? This is pretty much equivalent to higher lows at this point, which tells us that we're going to start pulling back to the upside. So in a bullish trend, you want to see the exact opposite, right? You want to see stagnation to the top end. You want to see lower highs being printed. And that could indicate that we're actually starting to see a reversal in that bull trend, right? So here's a bull trend from the other day. You can see higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Very systematically put. All you have to do is wait for those confirmation areas as we pull back, higher highs, higher lows. Here's this aggressive bull run. And what happens here? You get a drop, first drop into support. It can't push higher. Second drop through the last chance of support actually breaks lower. So these lower highs and stagnation at these areas pulls up. Lower high suggests that, hey, it's time to flip to the other side and stop buying this market. You start to see exhaustion. Now, speaking of exhaustion, we got to talk about order flow. So order flow tells us very, very well where the bottom or where the tops of these markets may be based on market participation, right? What the order flow tells us in these circumstances is where there are strong market buyers and strong market sellers. In theory, what should we see for the trend to continue to the downside, right? If we're looking at a bear trend, so this is the same bear trend that we looked at previously that most recently happened. If we're looking at a bear trend, you want to see sell pressure, which are sell imbalances, come into the market and start pushing price lower at resistance points, right? The more sellers that come in and the less the market drops, the more the market stays stagnant and tries to push up, the more you can anticipate the reversal trend move. So in this situation, let's break it down based on footprints, right? So you got sell stacks here, which means that there's big market selling, but then they're met with big buy pressure, right? These buyers, they manage to push them up, and that's their job. Every time big buy imbalances come in like this, their job is to try and push the market back up. And if they don't, the opposite should happen. So in this case, you're starting to see big market sellers, but look, they quickly get destroyed by these big market buyers. It means these are stuck shorts. Price comes back into that area, market buyer. You don't see any market sellers coming into these resistance points, right? But instead, you start to see stuck shorts at the bottoms and big market buying at the bottoms. Another stuck short. How do I know it's a stuck short? These sell imbalances should have pushed price lower. The fact that we can't go any lower on big market selling means that the sellers are losing their ground and we're going to get that run up. All you're looking for is big market buyers to start coming into play and holding price up without letting it slip back down. That's how you know that the buy stop run is about to happen. Number one, stuck shorts. Number two, big market buy pressure. That's where you know the reversal point will happen. So to a degree of higher certainty, you can see on the day session today, what we saw earlier in the session was we come into this key support structure and market buying comes in. No more market selling to press it lower. There's the pop. We come back into that same support structure. Big market buyer comes in right here. You can see this is the area to get in. Big market seller tries to push it lower, stuck short. There's your buy stop run and there's your counter trend move. So you can look at this on a 5-tick as well. Let's see what that looks like. 5-tick, the difference between a 10-tick and a 5-tick is the 5-tick gives you more of a intricate view, if you will, of the market at that point in time. So at that point in time, you can see the first time around what happened, right? You're getting stuck shorts down here, getting big market buyers coming in. There's your buy stop run. The second time around, same thing. Big market buyer enters the bottom of this market to hold the price up twice. So that's your counter trend move. Identifying on order flow where big market buyers or big market sellers may come into this market to turn the trend around. So keeping that in mind, starting off with market structure itself is a good area to begin to find those counter trend moves. There's more to it. You can add market structure if you will. You could add footprint and order flow if you will, because that starts to solidify your ideas and starts to solidify those levels of reversal a lot better. So don't trade against the trend until you see indication that that trend is over. The worst thing you could do is try to call a top on a rising bull or try to call a bottom on a raging bear, right? So those will both get you beaten up in the market rather than just identifying real stagnation, exhaustion, and order flow. So for example, right now we're seeing a lot of sell pressure come into the market, real life example, right at a key resistance area where there's a lot of sell interest. So what I'm seeing is big sellers coming in here, buyers trying to prop it up, and I'm expecting a push back to the downside to kind of kill this most immediate upside trend. So we just saw a move that lasted nearly 20 points altogether. That brings exhaustion to the market. You get big offers sitting at the top attempting to sell price back lower. You're seeing market sellers come into the price action. You're seeing market buyers attempt to hold it out, but looking like they want to fail. So let's take a look at this. There is the potential for another push lower if this market seller manages to close this candle. So let's give it some time to see if we can find this counter trend move. So you can see there are sellers coming in, trying to push it lower. So let's reconvene after this move has gone. Hey guys, so we're back and we were trying to identify the counter trend move, the counter momentum move to try and sell this most immediate rip. Now, what we had identified was big market selling in these sell imbalances and also big market buying. Their job is to fight one another to see who can take control of this. We also had a big offer block that indicates this is interest in selling. Now, in the longer term, we didn't see the trend reversal to push it down a few points, but we did see a nice little counter trend move that managed to move the market 3 points. So remember, 3 points is still pretty good. It's $150 per contract on the S&P 500 E-mini futures, but it's not the more extended move that we were looking for. So let's break down why this happened. So we saw stagnation at these tops, and what the idea was, sell here below the offers with the stop loss above the offers for the push lower based on this big market selling that was attempting to come in. Now, at the same time, we had this big market buyer. So these big market sellers are supposed to push price back down, while this big market buyer's job is to push price back up. Him and his friends managed to succeed right here. And even though there was a slight little move, it wasn't the larger, more incremental move that we were looking for. Why is that? Look at the size of these big market sellers, right? They're very small in comparison to this big market buyer, which managed to overpower these guys. Based on stagnation on the range bars, we saw that type of rejection stagnation, which caused us to think, hey, this is probably going to pull down a little, which it did to a small degree. So if you guys want to learn how to do more of this and find those moves, catch those moves, even if they're 3 points, $150 per contract is still amazing. Come join us at TRADEPRO Academy or check us out, but I want you guys to smash this like button if you guys learned anything. Now, if you want new strategies, free strategies, why don't you let George tell you about this upcoming webinar coming up next. This is Victoria from TRADEPRO Academy, and I hope to see you guys next time.